Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, what's coming up on the show today?
We're going to talk about a couple of stocks that have moved up and down and talk about why Arizona Gold, Colonial Coal, and one that I think will start to move next week.
Why did Arizona Gold drop this week?
Arizona Gold published most of the results for that 22-hole RC program for the Rizaka and Rising Fawn gaps within its patented claims at the Philadelphia project in Arizona. It did that on July 3rd. And of course, this is a week when Canadians and Americans basically are absent because they have the holidays stretching over the weekends. And the results were, frankly, disappointing. The gaps might as well have stayed as gaps. They were low grade. The vein seems to sort of pinch out and not really be there. And somebody decided on that day, it was a relatively low volume day, to unload 50,000 plus shares through Anonymous. That knocked it down into the low 30s when there really wasn't anybody paying attention. And the company used that as an opportunity the next day to set options, 990,000 at 33.5 cents. The stock had been sort of hovering in the 36 to 38 cents level. And sure enough, that caused some people to grumble, saying, well, why are you setting options at this cheap price? And these same people would have grumbled if the company, ahead of results, had set options and the results had turned out to be good rather than bad, and the stock went up. So you can't really win. And this decline is not particularly helpful to my KRO 2024 favorite index. But for investors on the sidelines wondering if there will ever be a turnaround in this bear market, this represents a very good entry price, and it is because this is a high-impact exploration play. At the moment, betting on gold breaking through 3,000 or copper through $5, that's not really going to happen. There's so much uncertainty about how the world will unfold over the next 6 months that we're not going to see these type of metal price moves that will pull money into the resource junior sector. It's going to have to be high impact exploration plays that attract money. And Arizona Gold expected to, it got its BLM approval. It's FONSI for the BLM land to the east of the Philadelphia vein patented claims a few weeks ago. And this allows them to have 2 drill pads to fan up to 40 holes from each one to drill westwards towards the Philadelphia vein. And they were waiting for one box to be ticked, and that was somebody needed to go out to the drill pads and make sure that this isn't the preferred hangout for gopher tortoises. This apparently has been done, and they were expecting a response from the BLM giving them a complete green light to go ahead, start drilling. But of course, this was the week of nobody doing anything, and they did not hear, but they'll probably hear up next week that yes, there are no gopher tortoises there, you can start planning. Now, there's a new obstacle that's kind of showing up. Mike Stark, the CEO, was on a site visit with a group there last week, and the temperature range was 114 to 117 Fahrenheit. That's absolutely scorching. That sort of temperature range is what killed over 1,300 people in Saudi Arabia doing their Mecca pilgrimage. And now the question is, can you get a drill crew to operate safely in such hot temperatures? So they're right now thinking about misting type systems and all that can be set up around the drill rig so that the poor drillers do not die from heat stroke or something like that. And it's kind of ironic here in the Bay Area where I live. We have had temperatures in the 95 to 105 degree range this past week. The excessive heat is so bad that all the parks except the ones on the shoreline have been closed. Nobody's allowed in it because of fire risk. Not necessarily that they'll cause fire, but if a fire starts, it'll be impossible to rescue anybody from these parks. So we're all just hunkering down in the shade and in our AC buildings waiting this out. In fact, last night at the July 4th celebration, they always have fireworks there in the Moraga Commons. And for the second time in the 40 years that I have lived here, it was warm and pleasant. Every other year, except for one time, the wind would be howling cold. You needed to have a puffer's jacket not to freeze to death out there. But this was one of those years. And I'm wondering how much worse is this going to get as we see the effects of global warming and the failure to really do anything to slow down climate change via the energy transition. Now, with regard to Arizona Gold, now's the time to buy because sometime in July, assuming they figure out how to keep the drillers safe, they will begin drilling what they call their Red Hill target. And this is a bulk tonnage target that sits on top of the vein that dips to the southeast. And so this drill program will test two things. One, is there a 1 gram per ton multi-million ounce gold deposit sitting there that never drilled because the historical focus has always been on the high-grade vein? And what happens to the vein when you chase it down dip where there have never been any drill programs? And, of course, you needed to drill from the BLM land to actually access them with a reasonably perpendicular hole. And if you pull down the company's latest corporate presentation, they now have an analog for what they think this Red Hill target will be. And that is the silicon deposit that Anglo Gold acquired from Bob Felder's company, optioned at 100% before his company got merged into Renaissance Gold. And it is now 4 million plus ounces. So if everybody's been sort of wondering what's the analog, they have that out there. There was another interesting development a couple of weeks ago. The company attracted as a special advisor Philip Yee, and he has played executive vice president and CFO roles for Kirkland Lake in 2016 to 18, and then with Eldorado Gold from 2018 until he retired this year. And neither Mike Stark, the CEO of Arizona Gold, nor Greg Hahn, the exploration VP, have any experience to speak of in terms of the M&A. So to attract somebody who has just retired, who has massive experience with M&A as an advisor, I thought that was an interesting development. The market, of course, yawns. This is sort of this Philadelphia vein play, who really cares? But I think there might be a much bigger set of eyeballs watching very closely now that long waiting period to get that BLM approval for drilling from BLM land and to test this Red Hill hypothesis. This is now a time to take a position in a stock that the market punished recently because they were doing some cleanup business, getting rid of, proving that there is something or nothing there in those gaps. Yeah, unfortunately, the gaps deserve to stay gaps, but you needed to know as part of developing this underground mining scenario for which they hope to have a resource estimate later this year.
Why did Colonial Coal pop today?
On July 4th, the Canadian government gave regulatory approval to Teck Resources to sell its 77% stake in the Elk Valley Resources, that's its steelmaking coal division, to Glencore for US $6.9 billion. The deal will formally close on July 11th, and Teck has now sworn we have nothing to do with fossil fuels anymore. We're going to be entirely focused on metals that serve the energy transition goals. Now, Colonial Coal popped modestly today, and the reason is that there was a cloud of uncertainty about the extent that the Canadian government would interfere in the sale of any of these coal, metallurgical or thermal assets in Canada. So approving this Teck sale was treated as a sign that no, they're going to be hands off. So all the wheeling and dealing can now proceed. And Colonial Coal, of course, has put itself basically up for auction to be bought out for its Huguenot and flatbed met coal deposits in northeastern British Columbia. And in in late April, when I last sort of had a serious comment updating everybody on what this story is about, they had just retained Citibank to be their sort of special agent to deal with all these potential bidders. So this has been going on for several months now. With this Teck Glencore approval hurdle out of the way, the stage is now set for these other parties to start getting serious. And the company hopes to be able to sell itself in the $5 to $10 per share range. Right now it's $2.50 to $3 range, but it could end up even being higher if there turns out to be a bidding war for control of these assets which have been taken to the PEA level and really basically just need to have the final feasibility permitting done in order to develop them as a future supply of metallurgical coal. And the parties everybody thinks are lurking in the wings are the Indian steelmakers who are eager to secure a supply of met coal for their steelmaking business, especially given their aspirations to be the driver of the next world supercycle.
Is Nevada Organic Phosphate any closer to securing title to the Murdock Mountain Phosphate project in Nevada?
Nevada Organic Phosphate is not a KRO favorite, but I talked about its story back on May 8th because the company was one of the four in my Metals and Forum session, Investors Forum session in Vancouver in May. And this company intrigued me because it has quite a unique story. It's bottom fish rated because the major missing piece is a BLM lease that grants it title to that Murdock Mountain Phosphate project in northeastern Nevada. Now, unlike metals in the United States, where you simply do post-staking and you have title to the mineral potential of it, phosphate and potash are treated as if they are fossil fuels such as oil, natural gas, and coal. So if you want title to anything, you apply for a lease. And this requires preparing an environmental assessment. And the company started this, or a predecessor did about 5 years ago, and it got interrupted by COVID, and then it got back on track. But it's been this arduous process of the BLM, doesn't really have the internal skill set to do it itself. But what it has done is that it has hired third-party consultants who are professionals to basically prepare an environmental assessment of the impact of an exploration program at Murdock Mountain. Now, the story here is there are these phosphorite beds that dip into the Leech Mountain range. They're not super thick, only a couple of meters, and they're not high grade like those ones in Idaho, which are 20 to 35% P2O5. They are only 10 to 20%. And people have known about this for many decades, but because of the low grade and the thinness of the beds, they've been largely ignored. Nevada Organic Phosphate has now struggled for the past couple of years, paying for all these reports required for this environmental assessment. And, poor Robin Dow has been telling his shareholders, yes, this EA is going to be coming soon. Well, today, this morning, the BLM published the environmental assessment on its website. On Monday, the company will very likely press release it. This kicks off a 30-day comment period, and it is a FONSI, a finding of no significant impact. So the public now has 30 days to review this report that's been filed and see if the BLM staff missed anything in finding no significant impact for this project. Now, if it were just an internal staff from BLM doing something for the first time ever, then one would have reason to be worried that there'd be a whole raft of comments, critical comments saying you missed this, you forgot this, and all that. But because third-party consultants were used by the BLM and they simply sent the bills to poor Nevada Organic Phosphate to pay, it had really nothing to do with any of this. This is now out there, and if in those 30 days, perhaps by mid-August, the BLM looks at all these comments and says, yeah, these are all irrelevant, they don't matter. They're, of course, back and forth with the consultants on some that might seem serious. They will grant the record of decision making this FONSI final. And the application, it was done like 3 or 4 years ago before Gary Smith became involved as a director and advisor about a year ago. And they applied for, there was some, 28 drill sites for core and RC, plus an awful lot of trenches. And when Gary came along, he said, we don't need this. We need 14 drill sites and we need core holes because we need to understand the geometry of these beds. We don't need RC holes. The surface disturbance is about 8.9 acres, but the real disturbance will be considerably less. So they are now hoping that the BLM looks at all this and says, okay, we give you approval. And Gary believes that the holes that they need to drill could be done within 6 weeks. And a question people have, well, if this, finally gets granted sometime late August or whatever, do you have enough time to actually get a drill program going? And apparently this is low enough elevation that the winter snows in the Leech Mountain Range do not affect access. So theoretically, they could drill all year. The constraint is that this entire area of northeastern Nevada is within a sage grouse study area. So there are concerns, especially during the mating period, breeding period from March to May, that there might be noise or anything that might disturb the sage grouse in their location where they do their fancy dances, mating dances. But there haven't been any observed in this area for quite some time based on studies that the research study system did. So it remains to be seen to what degree sage grouse restrictions will impact their ability to drill. But the program that they're going after is they need to prove 3 things. One, what is the continuity and thickness of these beds as they dip into the mountain? They know where outcrops, it's roughly 2 meters, and their vision is one of underground mining these beds. So continuity is going to be important. This is all broken up like some sort of jigsaw puzzle somebody tossed into the air. That's not going to be a good thing. The second thing is they need to understand the P2O5 grade variability within these beds so that you can put together a decent resource estimate. So they really only need to drill a series of shallow holes, stepping down the bed, figuring out what its dip is, what its thickness is, and what the grade ends up being. But the most important thing that they need to demonstrate is the low heavy metal content that they sampled in the outcrop is in fact consistent for the entire system, because these phosphorite beds have no chance of competing with the ones in Idaho, which run 20 to 35% P2O5. But the ones in Idaho have heavy metal levels far above the maximum produced by the U.S. government agency, and they have to chemically process that phosphate, turn it into MAP and DAP, which will have had all the thorium and other bad things cleaned out of it so that the farmers can apply it to their fields. But what was unique about these lower grade phosphorite beds at Murdock Mountain was that they were way below these maximum heavy metal content levels. But this was based on sampling what happens to be outcrops. So a major hurdle the company must overcome is to demonstrate that these low levels are consistent for the entire bed. And the story here is to develop a substantial 50 million ton plus resource of phosphate that runs maybe 10 to 15% P2O5, but that all you need to do is mine it, grind it up, and ship it to farmers to apply to their fields where the crops are intended for organic markets. Now, the organic fertilizer market for phosphate is not very well developed because it's really hard to find phosphate that doesn't have to be chemically treated. And this is why this story is so interesting and why I've got it as a bottom fish and had them at the Metals Investor Forum, because this company identified this concept. It's about demonstrating that these phosphate beds are real, that they will qualify as organic, and then develop enough of a resource where one of the big fertilizer companies can look at this and say, this is a market that can be developed. And within the giant Western phosphate field, this setting here seems to be rather unique. And the company, in addition to what they have now potentially with this major milestone have tied up a lease, they've also filed applications for other parts ringing the whole Leech Mountain range, because when Gary got involved, he started researching all past results, and there were groups exploring for gold and other stuff in the past. And there's evidence that these beds peak out in different parts all around roughly at the same elevation. So if they succeed in demonstrating these three key points of continuity, of grade consistency, and of the low level of heavy metal content, and have a substantial organic phosphate, there is a potential for a buyout. And right now, the market is so skeptical. The company has an implied project value of $3 to $4 million based on 57 million shares fully diluted and a 6-cent stock price and 100% net interest. But if this all does come together, the very high risk of failure is offset by a 10 to 100 times upside reward potential. So this is like a classic bottom fish for speculators. We still have to wait, at least 5-6 weeks to make sure they do get title granted. But once that is granted, once that milestone is completely in place, then it becomes an exploration hypothesis testing story. And again, we're at risk that what Mother Nature has hidden deep under the ground is different from what might be peeking out at surface. But that's why you have this 10 to 100-fold upside potential for a story where, if it's real, the company effectively has a monopoly on this resource, unless others look harder elsewhere and manage to find something similar peeking out. But after all the struggles they went through to get it to this stage, it's going to take others a much longer time to find something similar. And if they pull it off, some fertilizer company will move quickly to wrap this up and take charge of developing this organic phosphate fertilizer market.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.